Pick it up, let's go!
All right, everyone, welcome back. S&P is about to close down 2% now. Is it 2%? 2% on the day. It was a trend down day. I was not really expecting this, but nonetheless, it is down pretty significantly on the day. I did mention this yesterday though, how I was kind of expecting to some degree, not at all in one day. And it's still got ways to go, but expecting it to come back down and retest all that important stuff, right? You got the 200 period moving average, you got the 50 period moving average, the 100 period moving average, as well as that bull trend line or the bear trend line. We'll call it the bull bogey. So if it starts getting below this and closing candles below this, that's not good. Um, in any event, to our day trades. So I had called out initially if we can't stay above today 400 that we're likely to test some lower stuff. Now, I didn't want to short at 400. Traders could have certainly done that. I wanted to short up at 404.70 for starters. Maybe up to this 405.36, but 404.70 was my spot. Came down into the first area of interest. Now I posted 402.80 down to 401.70. So let me switch to, yeah, okay. Let me switch to a minute chart because it kind of tells the story a little bit better. Now, on the SPY, we are looking typically for a 50-cent move for the scalp portion. So let's say you have a full position on at 402.80. And this is how we are going to manage our risk. So 402.80, it gave you almost, actually, it did give you pretty much the 50-cent scalp right off the bat. Now, earlier in the day is what we really wanted. Now, if it just came down, boom, and then it came into the zone, okay, maybe I'll consider one position here and one position closer to 401.70. However, you really just wanted that 402.80 as the main spot. So you take the position, get the 50-cent scalp off the board, and what you're hoping for then is, let me get my brush out here. You're hoping for, okay, boom, shoot back up to 404 on the second portion of the trade, back up to that 404.70. Okay. Now, that obviously didn't happen. What happened was we had a nasty trend day, which no one can foresee, but you're half off the table, right, at the 50-cent scalp. And when it comes back down, you have an automatic stop at break even. You're not letting it go bad on you. When we stopped out here and we're break even on the trade, you're seeing it's coming back in, and at that point you're starting to eat time off the clock, and at that point you really don't want that 401.70 level anymore, right? So the manner in which these trades get into their levels is very important. Now, what happened the rest of the day? Okay, well, it's 11 a.m. If I'm here trading, so it's fine for me. Most of the case though, most people are done and they're pretty much done watching this. I called out a second zone, which was a little bit annoying and kind of a paint dry type of situation, watching paint dry. But it was about 470 down to 435. Now, this was a tighter zone. So I was like, okay, we'll take the majority of the portion of the trade up here, and we'll take the second half down here. The average is about 450 cents. Now, it did give you that scalp trade. However, at this point in the day, you're looking for a morning low typically. So I wanted way back up to at least 401 and a quarter on my full position. Now I would have taken half off the table up here, right? And then I would have let the second half run and hopefully get back up and test the rest of this important stuff. And that's typically 8 times out of 10 what's going to happen. What happened instead was it came back down. It started chopping around in here, and I actually ended up just getting out of this trade because it just wasn't working. Sometimes we have to be honest with ourselves. Well, let's go back to a 10-minute chart. I don't really like to spend too much time on the minute, but sometimes it tells a better story. Well, let's get back into this here. So, and that's a nasty looking close right there, but good stuff that we just closed the day because this also tells a story. Now, out at break even up here, okay, it didn't work out. We don't want the 401.70. Now we waited for this zone, hoping for a low of day. It didn't happen. Cut the loss. You're either at a break even or you're at a small loss, maybe a scalp loss, 50 cents. This came in and 400, the fat round even number is staring you at the face, right? So that was also on the table when you're in this trade thinking, well, if it's not just going to jump out of there and start testing higher stuff and give us our, good day trade, it's likely going to go to 400 and lower. And what I had, and let me actually go to a daily. What I had as that lower spot, which was kind of, again, staring you in the face when you're in a highly leveraged day trade, was that 396.75. If we were just going to have a nasty trend down day, you have a 50 period moving average and a fib retrace down to about 397. Didn't get there. It's going to get there, but it didn't get there today. So that's pretty much it on the SPY. It wasn't a good day, but should have been break even or maybe at a small loss. Had a good day trade in DocuSign. Let's go to DocuSign. Now, I called out 58 as the level. What did it do? I front ran this a little bit. When I give out an even number, it's pretty much a give or take. And, give or take 10 cents, 15 cents, pretty much. I don't expect anyone to front run the numbers. I typically try to stay even actually with a Pierce. I usually like if I call out 58, I'll go with 57.95. However, today, this kind of timed up with my SPY entry a little bit. So I said, well, if the SPY was going to bounce right around here, then I was going to take that trade. So I front ran it a little bit. That gave you your 50 cent, 60 cent scalp right off the bat. So good trade there if you wanted it. HD, this was pretty much last call type of trade. And it just kind of shit the bed here. Back to the minute chart. So I had called out in the morning. I had called out 396.20. Now, this is why it's hard to do things on Twitter and why I really, can't wait to get a website up and running where I can just kind of in real time navigate the markets with everybody. But if you pull back on a daily chart here, what I saw, and sometimes it's hard in the morning, I miss stuff, everyone misses stuff. But if you drew a fib retrace here on this gap down, look at this. It gave you, so this number, this number on HD was 296.20. Now, funny enough, on my other chart, so see it's double layered here. On my other chart, this fib retrace, and this came from Thinkorswim, my fib retrace came in at, no joke, this low right here. So I'll draw this right here. It was about 396.70 was the low that came in on the fib retrace on a different chart. And I said, okay, it's coming right into this level. And I tweeted out really quick. I was like, you know what? I'm going to take this trade, and look what happened. $2. You're looking for probably $1 to $2 on a name like this. 296.70. Excuse me. Boom. 297.75. It gives it to you. You're out. Now, honestly, something like this, I took half off the table, and then I watched it kind of mess around down here. And I said, okay, well, it's kind of looking like it wants lower. Maybe it wanted that lower fib level. So when it pops back up, I'm pretty much out. What you really wanted, and because if the market is playing ball, if the S&P 500 is playing ball and it's popping, this is going to pop. So this should have gotten back up, and let's go back to a 10-minute chart. This should have gotten back up to at least this breakdown area, 298.82-ish. So when I'm in at 296.70, I'm looking for that $2. You take half off the table at $1, you make it risk free and emotionless. Um, but it's at the end of the day, and I get it. Not everyone does this all day. I typically don't do this all day either, but sometimes I get caught in, and I want more. So this really is a morning business. You want something like that, right? Like if this was the correct level for today, it was 299. Look at that. I mean, shit, $4. That is big. You take half off the table at $1, and you get a $4 rip out of that. One of the names I had called out for lesson purposes, Walmart. Look at that rip. So sometimes you get into these levels, and I mentioned this on my first video, but you get into these levels and these things just take off like a rocket ride. And that's the type of trade where, okay, $1.50 probably on a $140 stock is what you're looking for. Take $1.50 off, or let's take, half the position off at $1.50 right here ish. And then you're just like letting this thing ride and ride, and it's like, boom, okay, it fills this gap right here, you're probably out. Um, but in any event, that's really a tough strategy to do. You just have to do it robotically, because most of the time you're gonna, well, not most of the time, but some of the times you are gonna get stopped out at break even. And the lesson there is because on these SPY trades, if I just let these things go bad, this would have been a pretty bad day. But look, you take the scalp off, you get stopped out at broken even, and okay, like we move on. Look at this. We'll try to catch the low stuff later. This didn't get down ultimately to the lower end that I wanted. I really thought that this could have gotten down closer to the 50 period moving average, which is essentially where I wanted the last trade. But in any event, those are too far away. In the afternoon, this is more a morning business. So we try to get the morning scalps off the table in our pockets and moving on for the rest of the day. So just wanted to show you guys how we managed risk for those two SPY trades and ended up, typically, again, this is all execution, right? Execution, emotion management. I can provide these levels for you, which is half the battle, right? I mean, the majority of people don't want to wake up and do the work trying to figure out where these levels are going to work out, at 8:15, 8:30 in the morning. So when you log in at 9 o'clock, 9:15, you know exactly which levels you're looking at and what your loss and what your risk is going to be. That's half the battle. The other half of the battle is actually managing it and executing. For example, like, the 510 versus the 58. I picked that up, but, again, most wouldn't have. For example, the SPY trade going to the minute. Some people would have let this go really bad on them, saying, okay, maybe I will, buy half here, not take 50 cents and then buy half here, which actually, you would have broken even, but then look, you know, obviously it starts closing candles below here and you're out probably about a buck. Yeah, about a buck. So again, the execution and the management, it's why I want to start the website so I can put the levels on the board in the morning, make it way more clear about, what the levels are, what the entries are, what the risk is, um, example share sizes for me, what I'm doing. And then I'm going to have commentary as well. So I will be talking through what's going on in the market, what's the SPY doing, because the SPY trades typically have a lot of stuff going on in them. So anyway, guys, good stuff today, and we will be back tomorrow on the charts. See you.